We do travel higher by about 0.6% on the S&P 500, up by about 0.5% on the Dow to close out the week. We started this way so many times, Tony Dwyer. A nice bid in the morning, then we get to late afternoon and we sell off into the close. Your thoughts on the price action?
It'll be interesting. It's going to be a tough trade to convince people to stay really long going over the weekend with so much news flow around. I think people are just trying to figure out what the backdrop looks like. Jonathan, I don't think it's, so in other words, I don't think it's going to be any great shakes either up or down today.
So dare I say we've gone from buy the dip to some people fading the enthusiasm?
Mm-hmm. Well, ultimately it depends on, I'm 100% buying the dip. You never, ever, 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 ever want to get negative on and overly defensive from an intermediate to long-term basis before you have an inversion of the yield curve. Every corrections historically are only considered natural, normal, and healthy until you actually get them.
Let me be clear, though, here, Tony. Your overarching guide to this market right now is so long as the yield curve doesn't invert, you're buying equities.
Period.
You're buying the index full stop.
Yeah, period.
Does that apply to you, Craig, to buy risk assets so long as the inverted yield curve doesn't come?
Well, you know, no disrespect to Tony, but that seems too simple for me. But the yield curve is a big indicator. The problem with the yield curve, though, is that it's driven by different dynamics than just fundamentals, right? And you're seeing it, right? And so the front end we know is driven by central bank policy. And so that's a clear reflection of what the Fed is doing. But the back end is driven by so many other factors. And the truth of the matter is that there is a dearth of high-quality assets to buy. And what you're seeing at these higher yield levels is a tremendous amount of buying, not only here in the U.S. from pension funds, but outside the U.S. And that serves to flatten the curve more than maybe the fundamentals suggest. So it might not be the same indicator that you once had.
And Janet Yellen made the same statement at the end of her press conference. That was her final salvo, which was the same kind of tone that Bernanke took, that Greenspan took, that there's something in the back end that's making it different this time. Ultimately, let's forget about simple, complicated, our opinions. You know, Greg, mine, yours. Let's look at the evidence.
Yeah.
You've never had the peak in the market to date without an inversion of the yield curve that shuts down credit and ultimately shuts down economic growth. So I'm going to go with 100% probability of the data versus trying to figure out why it's going to be different.